Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching easynomics. According to the State Bank of India, around 1.8 lakh crore rupees in 500 rupee currency notes have been returned to banks, of which 1.5 lakh crore rupees have been deposited and the remaining amount has been exchanged for other denominations. According to the report, not only would this result in a liquidity boost, but also a boost in repayment of loans, a boost for the RBI's e-rupee plans, and also a possible add-on support for India's growth. To discuss these key findings, I am now joined by the author, Soumya Ghosh, the Group Chief Economic Advisor at the State Bank of India. Welcome to the show. Let me begin by asking you to explain to our viewers the summary findings really at this stage of the withdrawal of the 500 rupee of the 200 rupee notes.
Yeah, thank you, Siddharth, for having me on the show. So I think a few days back in the RBI Monetary Policy Day, the governor had said that rupees 1.8 trillion of the 3.6 trillion has already come back into the system. And we also found out some time back, our bank had also found out that about 85% of these were actually deposited in banks and 15% were exchanged over the counter. So what we wanted to do is that we actually reconcile both these findings to look into the broader picture. So the first thing is that if you look at the current trends, around 85% are being deposited in bank and 15% are exchanged over the counter. So if we take that ratio as sacrosanct and assuming that the ratio stays on for the next couple of months, maybe 80-20 or 85-15 ratio, that means out of 3.6 trillion, 3.1 trillion odd could come back into bank deposits and the rest 50,000 crores would be exchanged over the counter. Now, the interesting part is that out of this 3.1 trillion which is coming back into the system, that could actually come back into the CASA, which means the current account of the bank or the savings accounts of the bank or the loan accounts of the bank. So there are three impacts over here. In the savings, and the ratio which we found out after speaking to several people and also juxtaposing on the trends which we are witnessing in our bank, is that the ratio is actually 40-30-30. That means 40% is deposited in current account, 30% in savings account, and 30% in loan account. So what it is doing first is that if it is being imposed in the loan account, then this amount basically is getting for loan prepayments. So point number one. The second point is that if it is witnessed, if it is getting deposited in savings account and a part of that is withdrawn, that means that is leading to an increase in the multiplier. We found out that 30% of which is deposited in the savings account, 60% of that is getting withdrawn. So that gives us a figure of around 55,000 crore. And the rest amount is being deposited in CASA. So the long and short story of it is that it is leading to an prepayment of loans. It is leading to an increase in CASA deposits, and also it is leading to an increase in deposits because a large part of it is basically exchanged over the counter. And this 55,000 crore which is being witnessed as deposits is basically, if we just go through the simple consumption multiplier which Keynes had proposed, that is 55,000 consumption, basically this will find its way into other person hand, that will find way into other person hand. That could lead to an overall consumption multiplier of 1.8 trillion, assuming that the overall consumption impact is 70% of the overall income. So in net, this will also give a boost to the GDP growth in the first quarter because a large part of this consumption will be front-loaded in the data. So therefore, a deposit boost, a liquidity boost, a GDP boost, and possibly a consumption boost in India has been front-loaded because of this withdrawal of 2,000 rupee notes.
Let's talk about that fourth point that you said, a possible boost in consumption. Can you explain where all do you see this money flowing into and what sectors, what commodities, goods, services are likely to be impacted?
See, basically, as we have found out that jewelry is, for example, one sector where it is getting impacted. Consumer durables is one sector which could also getting impacted. Real estate also is sector, one of the sector which is impacted. So these are some of the sectors whereby you will definitely find a consumption boost, and that is already happening. And the other important thing is that to the extent that that this is being used to prepay loans, this will also help the corporates, because a lot of corporates are now very cash rich. So what is happening is that a large part of the deposits, which is growth, which is also happening, is also because of the fact that a large part of these deposits which are finding its way into the banking system could be invested later when the investment opportunities start to appear. So, and of course, the point which you mentioned in the fact is that given the fact that digital transaction has now grown exponentially, a logical corollary of is that RBI may not have to print the entire amount of money which is going out of the system in terms of the 2000 rupee notes.
One other point, and this is an interesting finding, and I'm trying to focus on this. Digi payments at petrol pumps have fallen significantly from 40% to 10%. Expand on that. People are just coming in and buying petrol and exhausting their supply of 2000 notes?
Yes. So basically, this is an consumption boost. So the whatever you are paying to if somebody is going and spending at the petrol pump, so that amount of money will now be deposited by the petrol pump owners, maybe in their current account. So that will give a boost to the low cost deposit account of the bank. So basically, that will also lead to an improvement in CASA. But the second corollary of this, that a part of this is also getting withdrawn. We have seen that there has been an increase in ATM transaction also in the last couple of fortnight after this note was discontinued. So that means that a part of the money, and we estimate that around 60% of that, a part of the money in savings account is being withdrawn for lower denomination notes. So
has it been possible for you to determine how much, because you've also said that cash on delivery, e-commerce has also seen a uptick and increase. Have you been able to quantify how much that kind of sales and purchase have increased by?
See, it's difficult to quantify those numbers, but obviously this will be a part of that 55,000 crore consumption boost, which we are estimating is happening purely because of this withdrawal of the note. So that basically could be done based on some assumptions in terms of the average number of orders which is put on Zomato every time. But the important point to note is that that's why I'm using the term getting front loaded. So over a point of time, as this process goes on, the impact on consumption may actually see a diminishing impact. But the overall fact is that if we have a larger consumption, that will stimulate other parts of the consumption through the multiplier effect, and that impact could be significantly large. So on 55,000 crore, we can actually get a consumption multiplier of 1.8 trillion. So which is not a small number. And this number, if it is added to the private funnel consumption expenditure for Q1, you can actually have a GDP growth rate which could be in excess of 8%, which the RBI is projecting for FY24.
Okay, that's a clear headline that the chief economic advisor of the country's largest banking institution, Soumya Kanti Ghosh, is giving us, that GDP growth could be 8% and plus. Just expand on that. While the whole world is still undergoing a lot of volatility, inflation pressures in the developed economies, what does this broadly mean for the entire financial year, Mr. Ghosh? Because like you've been pointing out, there is a front loading of consumption, but it would also mean that once people sort of are through with this cycle of replacement exchange of 2000 rupee notes, there will be a dip as well.
No, of course, that's a point well taken. But the important point to note is that this withdrawal of notes is, and 3.6 trillion is not a small amount. So even if 85% of is deposited and 60% of this number actually, let me answer your question in a different manner. So right now we are seeing that 60% of his amount is being withdrawn from the banks. So over a point of time, as people deposit more and more 2000 rupee notes into the system, this 60% number could actually go up, because so from that point of view, of course, this impact could get a little bit diminished over a point of time, but it could be also possible that this ratio of withdrawal to the total deposit number could also go up. So on the net basis, it is difficult to say, but obviously the maximum impact on consumption will be at least till September, or if till September in terms of a boost to the overall growth. And I think that's good for us also, because the way the markets have been moving from April to June this year, the total amount of portfolio capital inflows which has come into in the April to June is at least US 8.5 billion. So that means at least 50,000 crores of money has flown into the stock market. So overall, all this augurs well for the economy. There could be some point of concerns. Monsoon is one of them, as we can see that the monsoon has been delayed, but let's hope that it makes up for adequate rains in the next fortnight or so.
Would this also impact inflation, consumer prices, at least in some sectors, as a result of what I would call a bit of overspending?
See, I would not say to that extent, because in economics, an inflation happens when consumption precedes investment. If you look at the last quarter's GDP data, consumption was already muted. So because last year consumption grew by 11.3%, this year the consumption has decelerated to 7.5%, and last quarter it was less than 3%. So consumption was already muted. Investment, the government has significantly spent on the capital expenditure. So my sense is that if investment comes before consumption, that tends to be non-inflationary, because in that case you have put adequate, because you know that the demand is going to come. So therefore you are putting up adequate capacity utilization plans. And the way the bank credit growth is actually happening, I think if you look at the last fortnight data, bank credit continues to be extremely strong. And this is despite the fact that a large part of this money is actually getting repaid. So you know that so basically what I'm trying to say is that if you are repaying a part of your credit loan, the credit growth should of course decline, but that does not happen. So this is the positive thing as far as inflation is concerned. Hopefully, I think the monsoon, as I am repeating again, the monsoon will make up for the loss in the first 20 days of June in the next fortnight or so.
Okay. You also said that there's been an uptick in sales of furniture, a rise in temple donations through 2,000 rupee notes. Have you noticed anything about the real estate sector? Because anecdotally, there are reports of much higher prices luxury home launches. Is there some correlation in that as well?
It could be possible, but I think right now the rules are also very strict from that perspective, because you cannot pay any transaction over 2 lakhs. You cannot keep cash more than 2 lakhs with you. So the rules are very strict, but that doesn't deter a part of this payment being made through these currency transactions in some of the places.
What you have also told us, Soumya Kanti Ghosh, is that Diwali has started much earlier than usual, for a lot of sectors. How will that therefore impact beyond the first half of the year? The reason I'm asking you this is that till recently, a lot was being said about how growth will slow down due to multiple factors. What is therefore likely to happen in H2 and therefore at the end of the year? You have mentioned 8% as the headline number, but please break it up for us.
But Siddharth, one point I would like to tell you in terms of the growth, I think we at SBI are only a very few organizations which had penciled in a growth rate in excess of 7% before the data was released. In fact, we're at 7.1%, and we are still confident that the growth rate will be in excess of 6.5%. If you ask me any concern as of now, the point, apart from the rainfall, which I said, the one other point of concern is that the urban demand has continued to be very strong. Rural demand is still catching up. But even after that, I think my sense is that if the service sector and the manufacturing sector, the way the things have been moving, and there has actually been, I'm surprised at the amount of credit growth which is still happening, and in terms of the sector-wise corporate data also, that all that remains quite strong. So none of the data anecdotally as of now suggesting a growth rate which could be significantly lower. There has been a lot of estimates which are still below 6%, but my sense is that none of the anecdotal evidence suggests that the growth rate could go that much lower. And we are pretty confident that despite some slowdown in demand in the rural sector, rural lagging urban, some concerns on inflation, possibly also an election year whereby the government will get into an election mode sooner than later. My sense is that as of now, none of the numbers do suggest that we are for a number which could be significantly lower than 6%. In fact, we are still believe that the RBI estimate of 6.5% is likely to be overshot in the current financial year.
Okay, since we are talking about the impact of liquidity as well, what's your own sense, broadly speaking, about interest rates? The divergence between India's consumption and Bharat's consumption, the rural part of the economy is well taken, but on the overall, where do you see the cost of capital heading in the next 3 to 9 months?
See, that is the point. This is the interesting point. I think if growth rate remains strong as we had penciling in a first quarter growth of more than 8%, and the numbers are likely to be released on the last day of August. I think 31st, depending on whether it's a weekday. And the RBI August policy is supposed to be in the first half of August. So if growth remains strong, I don't see large possibility of any rate action by the Reserve Bank at this point of time. So that's point number one. So therefore, the interest rates are unlikely to decline significantly. But on the other side, the other point is that as of now, given the surfeit of liquidity, given the growth momentum, given that the inflation has been largely under control and the next 4 to 5 months of inflation, assuming no unforeseen circumstances arise, will remain below 5%. So means every good data is now front-loaded for the first 6 months or so. So from that point of view, I think interest rate possibly have peaked. How quickly it could decline depends on the inflation trajectory and also the growth numbers. If growth numbers continue to be strong like that, I think the rate action on the part of the Reserve Bank could also be muted from that perspective. But I'm hopeful for rate action towards the end of the year.
Okay. My final question as we wind down this conversation, coming back to the point about monsoon, we have seen a deficit in Kharif sowing so far, but the sowing timeline has also been pushed. There is a deficit in rainfall. What's your own reading about the overall trajectory of the monsoon that we are likely to see?
No, monsoon is definitely, there is a shortfall in Maharashtra, for example, for the last 20 days has been a complete washout. So there are concerns on the monsoon. So that's on the downside. But on the upside, the point is that there are studies which shows that deficient monsoon doesn't necessarily lead to an increase in the food prices. So basically food prices may not increase even though there could be a deficient rainfall. So that's one point, and there are RBI studies on these El Nino in terms of the food prices. Hope that story plays out. But as of now, I think all of us are looking towards the skies for an early onset of monsoon, at least in this part of the world. I mean, in the state of Maharashtra and other states.
Well, that's absolutely right, Soumya Kanti Ghosh. Most of India is looking upwards towards the skies, and banks and people are looking towards their accounts as 2000 rupee currency notes keep flowing in, and they are flowing in and flowing out into multiple directions, into multiple sectors of the economy where a consumption boost of sorts is underway. And like we've been saying from the start, the withdrawal of the 2000 currency rupee notes is going to have multiple impacts down the line. And hopefully, Soumya Kanti Ghosh, once this period gets over, once all of the currency gets deposited, we'll connect with you once again to figure out what really the 2000 rupee note withdrawal has meant for the Indian economy. For now, thank you very much for your time with us today. With that, it's a wrap on this conversation. If you've been, thank you very much for watching. We'll be back with more. Do stay tuned in.